Good morning, hunters, and welcome back to the Daily Hunt from Multibaggers, airing on Tuesday, January 20th, 2026.
That's right. We've sifted through Monday's market chatter, and let me tell you, it was buzzing with activity. A lot of diverse companies were flagged, with a real mix of high growth potential and, well, some significant red flags.
Yeah, the sentiment out there is quite polarized today. We're seeing some aggressive optimism for future growth, balanced by a healthy dose of skepticism regarding current financials. It's shaping up to be an interesting day.
All right, let's dive straight in. First up, Alphabet, symbol Google.
Well, Google continues its stellar performance. The data shows it's already up 3% year to date, actually outperforming the broader market. We're looking at strong revenue growth, healthy profit margins, and excellent return on equity. They're consistently innovating, especially in AI. We rated them a buy yesterday, and frankly, it still holds strong.
Ethan, the fundamentals are definitely there, no argument. But that price-to-earnings ratio around 32 still prices in a lot of future success. While it's a robust company, we always have to watch the valuation on these tech giants. Still, given the overall health, it remains a buy.
Next, let's talk Micron Technology, MU. This stock is just on fire. The community buzz is extremely bullish. We're seeing an 18% year-to-date return, and the big news is that AI demand is absolutely overwhelming supply. They're building new fabs, making strategic acquisitions, and get this, insiders are buying aggressively, over 32% of shares in the last 6 months. We upgraded them to a buy recently, and it looks like it's holding.
The growth is phenomenal, Ethan, and the insider confidence is compelling. But my KPI alarm bells are still ringing slightly on that debt-to-equity ratio. It's high, around 21, which represents significant leverage. While they're expanding, that's a lot of debt to service. But for today, given the strong tailwinds, we'll keep it as a buy. Let's move to Netflix, NFLX.
For Netflix, the ads plus live events strategy is absolutely working. We're seeing 17% revenue growth, operating margins hitting 28%, making it, a real high-quality compounder. It's also trading pretty close to its 52-week low right now, which could be an entry point. We're upgrading them from a stay away to a cautious buy today. The financials definitely show strength, especially that operating margin. However, the market's still anchored by uncertainty around that potential Warner Bros. Deal. Antitrust reviews, integration costs, that's a significant risk factor that could still go either way. So that cautious buy makes sense for today. All right, for our next pick, MP Materials, MP. This is a fascinating story. The community sentiment is strongly bullish, driven by this macro thesis around rare earth materials. MP is a choke point owner in the U.S. supply chain, and with geopolitical shifts, governments have to secure domestic supplies. We're seeing defense deals and analyst upgrades. It was a stay away previously, but today I'm going with a speculative buy here.
Ethan, I hear the geopolitical argument, and it's compelling long-term, but the current numbers are tough. They're unprofitable with negative revenue growth, and that debt-to-equity is still high. The high price to book also tells me that a lot of this future potential is already priced in. It's a bet on policy overriding current financials. So it's a buy, but no, it's highly speculative. And now for one where the optimism and the numbers are completely at odds. Algorithm Holdings, RIME.
Brooke, the users are buzzing about Ryan's Semicop platform. They're reporting explosive revenue growth, over 1,200% year over year in Q3, huge ARR growth, and signing big contract expansions, even hiring a new chief revenue officer. People see a massive valuation disconnect. This is a microcap with serious potential.
Potential, yes, but the KPIs, Ethan, are screaming red. This company is deeply unprofitable with a net profit margin of negative over 100%. The debt-to-equity ratio is an astronomical 6,800%, and the stock itself has plummeted 90% from its 52-week high. This is profound financial distress. Despite any growth stories, it's a definitive stay away. We've never rated them before, but this is a clear no-go. And now for one where the optimism and the numbers are completely at odds. Algorithm Holdings, RIME.
Brooke, the users are buzzing about Ryan's Semicap platform. They're reporting explosive revenue growth, over 1,200% year over year in Q3, huge ARR growth, and signing big contract expansions, even hiring a new chief revenue officer. People see a massive valuation disconnect. This is a microcap with serious potential.
Potential, yes, but the KPIs, Ethan, are screaming red. This company is deeply unprofitable with a net profit margin of negative over 100%. The debt-to-equity ratio is an astronomical 6,800%, and the stock itself has plummeted 90% from its 52-week high. This is profound financial distress. Despite any growth stories, it's a definitive stay away. We've never rated them before, but this is a clear no-go. Lastly, let's talk intuitive machines, Lunar. The community's motto for this one is Lunar YOLO. The Lanteris acquisition is expected to bring in $1 billion in revenue. Analysts are upgrading, and the whole space sector is buzzing about a potential SpaceX IPO lifting all boats. Users see it as significantly undervalued compared to peers. It was a stay away yesterday, but the optimism is palpable. Optimism, yes, but let's ground ourselves in reality. They're 0 for 2 on lunar landings, deeply unprofitable, have negative revenue growth, and their debt-to-equity ratio is still incredibly high at 152. Plus, a negative price to book means they have negative shareholder equity. This isn't just a high-risk gamble, Ethan. It's a bet on unproven execution against severe financial headwinds. So for today, it remains a stay away. And that wraps up today's hunt.
Absolutely. Thanks for tuning in.
This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
From Ethan and Brooke, we wish you happy hunting, and we'll catch you next time on the Daily Hunt for Multibaggers.